Hi guys, it's Thomas here from COTbase.com. Welcome to our weekly COT review. Today we're going to be looking at the 48th Commitment to Traders Report of 2020. But before I start the review, if you're new to COT analysis, then check out our website. We offer a lot of educational material. If you click on COT over here, you will find written materials, COT basics, all the different report types, some typical setups, a lot of written format educational material. But we also have some very useful videos as well, tutorial videos on the COT report basics and some analysis tools as well. So back to the review and starting off with our first market, which is crude oil, where we have a 24% change in commercials positions. You can see that change size on the chart over there. It's not that easy to see, but it is amongst the largest changes in the past 1 year that we are looking at right now. It is a bearish COT change signal. And if you look over here, small speculators have changed their positions pretty significantly as well. So all over, all our major trader categories are showing us larger changes. That is a bearish signal that could influence the market in the near term. If we move on to the 5 years chart, then you can see what the extreme situation looks like. And if you draw a horizontal line like what I'm showing to you right now, with the current value of commercials, you can see where that stands on the most bearish and most bullish extremes that you can see on this 5 years chart that I have set. It's more or less in between those two extremes, possibly leaning towards the bearish side. That's the case for large speculators too. That's just something you should keep in mind. So before we start heavily shorting this market, based on this extreme signal, you should definitely keep in mind that both of these major trader categories can increase their positions, meaning commercials could increase their net short positions from where they are towards, let's say, 750, 800,000 contracts net short level before we reach that extreme where we can expect a major shift in the trend. We'll see what happens. That's something you should keep in mind. The next market we're going to analyze is orange juice with a 21% change in commercials positions. You can see that change size over there on the chart. Once again, a change size that is larger than average, coming after a rise in the market. It's signaling some halt in this rise. We could see a bit of a decline early next week. If we move on to the 5 years chart, you can see that the extreme is visible. It's roughly 2 years since we've seen such an extreme. So 118 report. And of course, since the reports, they come out on a weekly basis, and there's 52 weeks in a year, you can add that up and we'll get roughly 2 years, a bit more than that. The same is for large speculators, 116. So that's the extreme size right now. If you look at this 5 years chart, of course, we can see that extreme can grow to even greater levels. Nevertheless, we can state that both of our major signals, the COT change signal and the extreme signal, are pointing downwards. Cocoa is our next market with an 18% change. Of course, we are talking about a correlating market, another soft like orange juice. Again, we are seeing a much greater change than average. It is coming after a rise in the market. We really like those COT change signals that are pointing in the opposite direction compared to where the market is headed. So we could see some further declines in this market. 5 years chart, here we go. You can see that once again we're a little bit closer to bearish extreme levels. You can see from February of this year a beautiful example of a successful bearish COT extreme signal just at that top. Now we are not at those levels, even though the price is very, very close, meaning we could see the rally continue before we reach a top. That's something you should keep in mind. Okay, moving on to large speculator COT extreme, we've got copper on top of our list with an all-time extreme, not only in large speculators but also in commercials. Now this has been going on, this stress build up in the market for many months now. You can see it started roughly in February. It was more of a bullish extreme over there. We had a drop, of course, because of this pandemic, but it eventually stopped, and we've seen a significant rise in the market. And as the market risen, you can see how traders corresponded to that. So large speculators initially started decreasing their net short positions, eventually turning net long, increasing their net long positions, and of course commercials just the opposite. So that's where we are right now. And we can expect in the medium to long run a shift in this trend. So the long-term indicator that we have is pointing downwards. Corn is our next market with the 492 report extreme in large speculators, but look over here, we have an all-time extreme in commercials. Now on the chart, it's quite visible that it is an extreme. You can see quite clearly what happened to the market after we had that last significant bearish extreme in the market just at that top. So here I should say that we can expect this market to shift towards lower prices. Of course, these all-time COT extremes, as I've said many times in the past, can be in the market for quite some time, actually, a few weeks, few months before the market starts to react and we see a change in the trend. The last market for this review will be orange juice, where we have this 118. Well, we just talked about orange juice. Sorry about that. The Euro-British pound pair. Let's look at that with a 93 report extreme in large speculators. So you can see that extreme on the chart over there. It's not that visible, but don't forget we are talking about a market that has much less COT history than the previous markets I've been showing you. So you can only compare it to such a region. This is why I would recommend for everybody who trades this pair to, instead of looking at the Euro-British pound futures COT report, you might as well look at the Euro COT report, analyze that separately, then analyze the British pound separately, and come to a conclusion if this is the market you trade. That's something you can do. Because, you can start analyzing this and, well, I don't know, it's leaning towards the bullish side, that we've seen much greater bearish extremes in the past. Well, you know what? Don't do that. So that's my suggestion. Don't do that. Just simply analyze the two currencies separately if you trade this pair, and then come to a conclusion. So that was all for this review, but of course, don't forget there's a lot to do here at COT Base. You can analyze all the markets, of course. I only show you a few market categories. There's stock indexes, interest rates, and cryptocurrencies as well. You can look at other data sets if you want. You can look at the newest COT report types, other data types, and dig deeper in your analysis with all the tools that we offer. Thank you very much for being with me. I appreciate your attention, and I hope to see you with my next review. Take care. Bye-bye.